Welcome to TradeTheMBI.com. This is John. This report is for it'll be the 6th of December since today, December 5th. We got a closure for the funeral of George Bush, former President, Herbert Walker, so 41. But anyway, the big excitement, of course, so we ended up with this massive gap up after the China deal. Things have been going fairly decent for the buy setup as it was going. We got a positive extreme on that giant gap up, finished midway into the range of the day on it, had touched the 50. We knew that we were going to come back down to that 50% low. Once the selling started, though, we ended up getting a violent rejection as the cyan popped above green collapsed below it, orange moved above, and steel was already in a decay. So that wasn't too big a shock, but this just meant that you ended up with basically buyers fleeing the market, literally, all at once. And then we hit key levels, the 62, then we broke through the 31, which happened to be all the ABMs in between, and that just left the yellow line right here, which was the right about the 23%. We got pretty close to it, but then just above it they started to buy in there, and that lifted it up right to the ABM green, which we'll put the value up there so we can see it right there at 2150, and you can see we're a little shy of that right now, so that's going to be the resistance coming back onto the upside. And you can see pretty much identical. So a little bit less weakness from the NQ, NASDAQ. So it's interesting that they all subsequently put in a P2, which just means that we ended up with a higher pivot of the red DOC, which potentially gives it the support it needs, but you have to have a buy signal within that. And of course, the euro really didn't suffer that much. This was really more U.S. reaction, and I think that's just because there's still a lot of debate as to what it means with this whole tariff setup, as well as the ridiculous raising of interest rates that has led up to this point where the Fed has decided they want to cool the market off, and that's how they're going to do it, by just raising rates. They're soft pedaling it now, maybe too late, because it's the same thing Bernanke did in 2008 when he skyrocketed rates for fear of inflation. Here, they're just raising rates because there was never any inflation or anything like that that needed it. Of course, they call it normalization, but what's normalization after a decade of, Fed control? Regardless of that, we have to take into account what is. Obviously, people fled to treasuries, safety. Oil, not going to get any support right there with the Saudis having turned up the spigot. Plenty of shale production in that, at a build in crude. There's plenty of excess there. So that leaves only gold as an alternative store for value. So there it is, boom, starting to make its spike that we've been waiting for quite some time. So let's turn to this 5K. There are just several days, and the odd thing is this year we've had a substantial number of what I call once in a decade kind of trades, which is so similar to what's happened in 2008 from size, just the range, and it's just been beautiful, especially with the DOC. We started off with ending the day previous with a short signal that produced beautiful new lows, gave a nice little buy signal, a couple of them set up in between, and then coming across beautiful DOC spreads started early decline. And you got to remember, this is all the way up at 27.84. Now, mind you, we ended up with another sell signal back down at 75. No new buys within that. And then as we came across, we continued to get those sells. So that one came in at 27.75. We ended up with another sell right there at 63 range. And at that point, I was pointing out that I was just trailing what I already had, and it's just straight decline with all these no orange setups, and a lot of them were on making new lows, and I don't buy anything that's been making on a new low simply because they tend not to last unless they could really substantially make it over the 23%, and you're not looking at shakeouts that are well below 13.5, which all of these are. Oh yeah, you can see I've got the MBI indicator in here. What I was looking at the MBI indicator, sometimes when you get into these extended runs from a bull standpoint, there are areas where it's a little easier to follow a trend move in it because it consistently has the rising cyan, where you may get a little bit softer reading out of a DOC red before that fails. And in this particular case, worked out perfectly from a DOC standpoint because, again, we had been looking at from, even well before this, no steel reset through any of this. So at this point, now we're down to the next sell signal, 32. So we remember this started at 80, so that's already 50 points. And then by the time we actually get a buy signal that I think is legitimate with a little bit of buildup, we're down to 27.09. So, that's 70 some points in the overall turn of this. And I posted this turnaround because I wanted to say, hey, this is not just, we're just riding short and forgetting about anything that has potential. It's like, we started to develop P2. At the same time, you get a P2 buy signal, even from an MBI standpoint, that was decent. It was still a little bit weak from a shakeout, but it was a higher pivot from there and moving up. And then by the time you get to the second bar here, we were almost above the 13.5. And it was slow, no question about it. But the criteria for it to stick around stayed with it. It even produced a secondary one. But then it got yellow dot sort of overbought in between and kind of hung flat. This is the difficulty sometimes with longs like these. I have to have your stop a little bit lower. So I was at the 23 following most of this until I was going to get a clean DOC spread, which would require a reset. And we did. We ended up with the steel reset, ending what effectively would be that short from 27.80 to the 27, where are we at right here on this one by the time it dipped? 27.18. So roughly 60 some points. And we continued to come along, ended up with a little short DOC spread at that particular point at the peak. It didn't produce much because it only came to the 50% and made another pop-up, at which point we ended up with this interesting setup because what I like about it is, for me, I get 3 out of the 4 that I usually am looking for. I like to see crossovers. So at this point, when you get the full snake short, at this point, right at the 0 level for red with a couple of positive extremes, I'm not afraid to play that right near the peak, and because it's heading in the right direction momentum-wise. Because I got my steel crossing below cyan, I got the crossover of the orange above, the green crossed below the orange as well. The only thing the green didn't do was cross below the red. If it had done that all at once, then it's like you have all 4. It's like boom. So you just adjust your probability. It's like, okay, I'm expecting that I'm not going to make a new high, so it makes it easy for a very tight stop going above that. And then, of course, the DOC spread. So even if you waited till you get the full DOC spread, fine. You're 26.50 versus I was up there closer to the 27.75 below the high of the 29. And anyway, what happened then? We continued to do the exact same thing, making new lows and continuing to drop. So even from the 29, we end up dropping all the way down to 26.95 range, which is another 30 some points. So after catching it to the upside, catching it again back down, and that was enough for me at the end of that. And then we ended up with the next day action, which cleared out my stop. I think I had been trailing it and lowered it by the time I left to go to bed, right around the 23, right over here, which was 27, 10-ish range, something like that. It was 05 to 25. I was a little higher than that. I was in between the two, just to be slightly above it, and it hit me while I was asleep there. I expected that thoroughly because knowing that the market would be closed, this is an off-hour probability to come back up to the 50% range. And that's exactly what they ended up doing with it, because it's just low volume, knowing no one's going to be around, especially after that kind of a bloodbath. You're going to get some kind of pullback coming up underneath. Really exciting, and I think it's just fun to be able to have days like that, because they're just so extreme and continuation. Now, everyone's of course got a billion excuses, blah 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 reasons. I think you just have. It was interesting to watch some of the liquidity pull. I think what you're, combination of the holiday setup, combine that with this uncertainty with the trade, but I think also you've got a lot of bit of this action taking place in the political arena with hearings, Clinton Foundation stuff. You have the Mueller, so there's just a systemic fear, and in those particular cases, you go cash when you're afraid. So that's a classic kind of trade, particularly when you're seeing some of these dramatic signs of slowdown economy, real estate, with the interest rates have really pretty much shut down new home sales, blah, 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 blah. So that has a ripple effect. So the market's pre-pricing that into the first and second quarters of next year and saying, hey, that may have been too much, too fast, and while things were really hot, you pretty much just slammed the brakes on it hard. And we talked about that months ago when it was happening, and we knew where it was headed. And so that's why I've been unafraid to play some of these big short runs, because there's still a whole lot of room at 2,700 for this to retrace. Even going back to 2,000 still would be not out of the question. The fortunate thing is we'll just have to see if it has a dramatic impact on the GDP and go from there. So take your opportunities, watch the funeral, review some of these setups that I mark on here so that you can go back and look at them, because they're just too darn powerful to ignore. And it's really fun when you can see that developing crystal clear. As always, though, trade well. I'll keep putting up relevant comments on the Skype chat and charts and following along, just so you can see how I typically do it and go from there. As always, trade well. We'll talk to you later.